For a decade, auditors signed off on $1.9 billion in cash Wirecard swore it kept in Philippine banks. That money never existed, not a euro of it. Wirecard was Germany's fintech champion, a DAX company worth $24 billion. And in June 2020, it admitted the fortune backing its balance sheet was fiction. The chief operating officer who ran that fiction didn't wait around for police. He vanished, and investigators now believe he's working for Russian intelligence. Wirecard started in 1999 in Aschheim, a Munich suburb most Germans couldn't point to on a map. What made it different wasn't the payment processing. Every fintech does that. It was the banking license underneath, through a subsidiary called Wirecard Bank AG, which meant Wirecard didn't just move your money through the system, it also got to be the system. By 2018, that arrangement had carried Wirecard into the DAX, bumping out Commerzbank to sit alongside Adidas and Deutsche Bank. Frankfurt had just handed one of its 30 most important seats to a company whose own rivals couldn't explain how it made money. One competitor put it bluntly, Wirecard's books were a book sealed with 7 seals. Other rivals were friendlier, in the way rivals are friendly right before they get run out of a market. Wirecard was, in the words of one competing CEO, simply a great risk minimizer. Another called it flatly one of the innovation drivers of the whole industry. Neither man had actually seen the books he was praising. Chinese tourists increasingly wanted to pay abroad the way they paid at home, through Alipay, through WeChat Pay. And Wirecard built the pipe. Wirecard built the pipe. Printemps took it. The Body Shop took it. Select luxury retailers across Europe adopted Alipay through Wirecard's infrastructure, seeing payment acceptance as critical for reaching Chinese spending. Wirecard didn't just process the payment, it owned the plumbing. That plumbing was real, which is exactly why nobody looked past it. Analysts don't audit a company that's growing, they just ride it. Wirecard's own executives sold the pitch in exactly that reasonable-sounding register. One vice president told reporters that Chinese travelers simply lacked the right payment instruments, and that shopping was a substantial part of the trip itself. True, boring, and completely beside the point of where the money actually sat. So when rivals called Wirecard's numbers unreadable, the market heard confidence, not warning. Investors picked the reading that let them keep buying, and they had every reason not to look closer. In 2019, the Financial Times ran an investigation with a headline that didn't bother being subtle. House of Wirecard, Carton House, a house of cards. The reporters had internal company documents allegedly showing fabricated revenue inside Wirecard's Asian operations, the exact region where that unreadable balance sheet lived. Wirecard's response wasn't to open its books, it was to fight back. Wirecard's spokespeople had a line for every version of this scrutiny. Success brings envy, they said, when short sellers circled. Even we find him hard to pin down at the moment, they said, when pressed on one executive's own murky role. One former manager put the company's information appetite more bluntly, saying Wirecard probably knew more about its customers by then than Germany's own credit bureau. BaFin, Germany's top financial watchdog, opened a criminal investigation, not into Wirecard's accounts, but into the Financial Times journalists for market manipulation. Then, it banned short selling of Wirecard stock outright, the only single company ban in its history. The regulator spent 2019 guarding a share price instead of examining one. Nobody in Bonn ever picked up the phone to check the Philippines. That phone call finally happened on the 18th of June, 2020. Wirecard told the market it couldn't confirm the cash sitting in its Philippine accounts, the same money that had backed its balance sheet for a decade. So the fabricated revenue the Financial Times had been chasing for a year, the fiction no regulator bothered to check, wasn't hiding in some other set of books. It was this. BDO and BPI, the two Philippine banks named on the paperwork, ran their own checks against Wirecard's documents. Neither bank recognized the letterhead as its own. This wasn't a filing error. It was a decade of forged paper, accepted year after year by auditors who apparently never picked up a phone. Two banks on opposite sides of the fraud told investigators the exact same thing. None of it was ever real. For 10 years, Ernst Young signed off on a fortune they never independently confirmed with the banks themselves. Auditors are supposed to be the check nobody can fake past. Instead, the world's biggest audit firm certified a lie that a 5-minute phone call would have killed. Nobody made the call. By the 25th of June, it no longer mattered whether they ever would. Wirecard filed for insolvency, owing debt built on a fortune that had never existed in the first place. A company that had rivaled RWE and Lufthansa went from blue chip to bankrupt inside a single week. Braun resigned that same day. Police had him in custody soon after. His chief operating officer was a different problem entirely, because Jan Marsalek wasn't in Munich to be arrested. He was already gone. Braun sat in a police interview. Marsalek sat nowhere anyone could find. One executive still answered questions, while the other simply stopped existing on paper. No arrest warrant resulted in his capture. Investigators tracked him to Russia instead. Just a board seat that emptied itself and a name that moved onto Europe's most wanted list instead of a docket. Years later, that's still where it sits. Interpol issued a red notice arrest warrant for Marsalek's alleged role in the scandal. What they don't have, and have never had, is him. The intelligence services now tracking him aren't asking whether he ran to Moscow. They're asking when he started working for it. Reporting from the Wall Street Journal, from Der Spiegel, places him there in comfort, allegedly under Russian protection, allegedly useful to people who don't waste protection on amateurs. Which leaves one uncomfortable possibility sitting next to the obvious one. Maybe Marsalek didn't flee to an intelligence service. Maybe he'd been reporting to one the whole time he ran Wirecard's books. Reporting since 2023 alleges Marsalek didn't just take shelter in Moscow. He allegedly helped run a spy network operating across Europe, with sourcing pointing to both the FSB and the GRU. Not a fugitive hiding in an apartment, in other words. An asset, apparently still working. The company that couldn't survive one bad phone call had, allegedly, been reporting to 2 intelligence agencies the entire time. Marsalek's new employers, real or not, didn't have a payroll to worry about. Wirecard's did. Following insolvency, Wirecard's core operating business was acquired, and thousands of employees faced redundancy as the company was dismantled. People who had no say in either outcome. In March 2022, Munich prosecutors made it official. Fraud, breach of trust, accounting manipulation, the full charge sheet a court can throw at a man who signs off on a fiction for a decade. Marcus Braun faced prosecution on charges of fraud and accounting manipulation for his decade-leading Wirecard. Braun stayed. He's the one now finding out what that costs. Marsalek never did. He is reported by multiple accounts to be living inside Russia's intelligence apparatus, protected rather than pursued, useful rather than punished. The man who signed the fiction faces a Munich courtroom. The man who built it answers to Moscow instead. The regulator that spent 2019 hunting journalists instead of ledgers is still standing. The firm that certified a fortune it never once confirmed by phone is still one of the world's biggest auditors. Both survived the collapse with apologies, reviews, promises to do better, and neither has ever fully explained on the record how a decade of forged bank letters made it past them. But the letters were only ever the easiest lie to catch. Wirecard processed billions in real transactions for European retailers across thousands of terminals, raising questions about the full accounting of transaction flows. The fabricated $1.9 billion made headlines. It was never the only number that doesn't add up. Marsalek, wherever he's sitting inside Moscow tonight, is presumably the only person who knows the rest. He isn't talking. That's the next file worth opening.